let's get started. Sheldon Kimber, welcome to What It Takes.
Thanks for having me.
You're welcome. I want to start with some scene setters, we call them, just to give listeners a sense of Intersect at the highest level, starting with what is your purpose at Intersect Power?
I ask myself that every day, what my purpose is, but I think you're actually asking about the company.
It's really about how the three megatrends of digitalization, decarbonization, and electrification are converging to change kind of the future of electricity in our industry, right? In our country. And when we think about decarbonization, I mean, everybody in this room, I imagine, still cares. We're all still here for a purpose. And administrations come and administrations go, and we'll get back to the business of that, I'm sure. Some of us are still sort of digging in, cozying up to our favorite hyperscalers, hoping that we can do the best we can. Digitalization, you don't need to read too far into any given paper on any given day to figure out kind of what's going on with that. AI is eating the world. AI requires an enormous amount of power. And for all the people who say AI is going to get more power efficient, I would point them to the fact that pretty much every feature you're being sold in AI, whether it's reasoning or persistent memory that will be necessary for agentic AI and all of these things, for AI to be the useful sort of, apologies, Kristen from Oric, but, legal replacements or whatever else you're going to get out of it, it will need to remember the deal you did, like 5 years ago or whatever it is. And the reality is all of those things, context windows, everything just requires more and more and more and more power. And those aren't linear. Those are like exponential increases as you do the capabilities. So even just to keep up, the efficiency gains they won't keep up. So digitalization is big. And then electrification is a trend sort of in and of itself, right? I mean, we think it's just decarbonization and that's sort of the side effect is electrification, but we're actually moving into an era where electrification and electric products are actually better, right? And so all of those things are just exploding, the need for electric power. And if we're not careful, one, we probably have to figure out ways even before that demand growth to generate electricity in a better way. And now if we're not careful, we can actually go backward dramatically. So.
And tell me, who are your customers? What's your business model? And summarize traction to date.
Yeah, so our customers and our business model, is ever changing, I would argue. It's a little bit strange because we're not a retail business. So a lot of times the bulk of our business is really kind of wholesale, B2B, if you will. I don't really have a model for it. It's B2U, business to utility. So we sell a lot of power over the grid to utilities, to CCAs, large investor-owned utilities, those sorts of things. Increasingly, though, that's not really the bulk of our business. Our business is now growing much faster in the sort of large corporate space. So we're there offering, virtual power, virtual VPPAs and grid-tied power to tech companies and those sorts of things. But we're also now increasingly offering kind of co-located power behind the meter, powering data centers, those sorts of things. I mean, and I know you asked me to keep the answers short, but I will diverge here just so people get the scene set, because that's what you called these. The scene setting is Intersect really is at this inflection point where we identified years ago that the grid was broken and that load was going to have to come to generation, right? This insight that there's plenty of power at the wrong time, at the wrong place, plenty of clean power, and so we really have this. To date, we've been articulating that around, hey, well, what about green hydrogen? Hey, what about clean steel? What about all these loads that could come to generation? And we've been kind of this power company with a bit of an innovative and thoughtful approach and some good thought leadership and some well-written blogs and a loud CEO and, all of that sort of thing. And now what's really funny is that like that vision, that view of the future has actually kind of turned into the dog catching not the car, but the semi-trailer. And we actually literally are spending our days right now as we raise capital and do these other things we're doing right now, thinking about are we really just an AI company? Are we just an AI infrastructure company? And I know that sounds very hypey and very, crowd, but I am not the kind of person to take it lightly. Obviously, my hope is that you guys have seen from what you might know of me that like I don't go in for hype, I go in for steel. But the more research I've done, the more thinking I've done, the more I see that like these two things are inextricably linked. So our customers are increasingly like co-located loads focused on digital.
And traction today?
A lot of traction. I mean, we're doing about $200 million of EBITDA right now. We're running $4 billion of assets in the ground. We have one of the larger battery fleets in the country at about 2.5 gigawatt hours. And we're breaking ground this year on $9 billion of assets. So we're in project financing right now. We've done about half of that. And so yeah, I don't think there's a lot of people in the country right now in either power or digital who are breaking ground on $9 billion of assets. So next time you see that really hot, AI company or renewable play come in and tell you that they're changing the world, ask them how many $1 billion they're putting in the ground, because sometimes people forget that. But so a lot of traction, and then obviously our partnership with Google, which is huge. They're a big investor in the company. We're doing our first data center with them. Will come online next year, and we're actually moving now into big deals with hyperscalers that we'll be announcing shortly, where we will actually own the data centers.
All right. Thank you for setting the scene. I want to get into the heart of what it takes, which is about you and who you are as a person. So you spent your early years in South Africa. You moved to the US when you were 7, bounced around the country for a bit before settling in Ohio, where you went to junior high and high school. I know you were good in school. You mostly followed the rules, a bit of an overachiever. Tell me about little Sheldon, and then tell me what you remember of growing up in South Africa and then Ohio.
I appreciate you're not using the term young Sheldon, because I get that a little too much. But I mean, the first thing I'll tell you about Sheldon is that it's much easier for me to talk about my business and stay on messaging points than it is to talk about me. So actually, this interview, the reason I just had a minor panic attack, and I apologize for that, is that actually this is the hardest thing for me to do. I do really well when you wind me up and I'm on message and I'm on script and all that, but like actually talking about this is this sort of unscripted dialogue is actually something that scares me more than anything. So
I appreciate you acknowledging that. I think I always tell guests, I'm like, it's so easy. You just talk about your life. You've been living your life your whole life. It should be fine. I was the guest on my own show once, and I was terrified. Like, I knew every question that was going to come, and it's still, there's something about the vulnerability of sharing who you are that is just, I think, something that we're not used to in the business world, and that is what makes the podcast special. So thank you for being willing to be here and be a part of it, and thank all of you for wanting to hear these stories.
I also have to just acknowledge the fact that, like, I wake up every day these days. Like, this is just for all of us actually in this whole industry. Like, it's not easy right now. Like, I mean, I was up real late last night, like looking at executive orders on how we're never going to build a wind farm in this country again, right? Like, I was in this morning in like crisis mode with my team, trying to pick apart like how we're gonna, tap dance in a minefield. So like it's just endless. So the residual, I acknowledge with my team all the time that the residual sort of stress level, even in the background on a good day right now, is real high. So anyway, with that, young Sheldon was, I think, yeah, I mean, just the usual stuff, right? I mean, I wanted to kind of be good at everything. I sang, I acted, I did well in school. I played sports, not well, but like all of them. And yeah, I mean, I tried to be the Renaissance man of Central Ohio Public School. And then I built a lot of computers, which I've told people about now because I feel like I have returned to my roots, building the world's largest computers. I remember the very early days of GPUs, which I like saved my money and worked at jobs to buy so I could play video games. And now, who knew that they would be like the heart of artificial consciousness? I just wanted to get like 60 frames per second. So, yeah, I mean, I was a big geek, and
and kind of what you would expect. So
I'll ask you about your parents, but first I want to hear about what do you remember about growing up in South Africa?
I don't remember a ton. I mean, we moved when I was about 7 years old. I remember a lot. I mean, but I think probably the story that I've told in the past that's probably formative is at one point I remember years later actually when I was I was still a kid, but we had left South Africa, asking my parents about something about we used to play down at the edge of the garden by the driveway, and like I always remembered there was this car across the street, and I kind of figured it was something about the neighborhood or whatever. I had no idea that when you're a kid, you don't really think those things. But then I remembered one day, and I was sort of talking to my parents, and like they're like, "Oh yeah, that was like the special branch police. They like at times watched our house because my dad was saying things the government didn't like or whatever." So it was an experience I think that I didn't appreciate while I was in it, but now. There's a you can take a lot of countries in the world and draw some conclusions and experiences from the experience my family had, and we should not go back there. So.
Your parents, Alan and Rosemary, are here tonight in the audience, which was really special. Growing up, your dad, Alan, was a Methodist minister who, like you said, spoke out against apartheid, even under this government surveillance. Your mom taught public school for 40 years. Your sister spent her career working on disability rights and addressing homelessness. How did growing up with a family that had these kind of values and this kind of conviction shape how you saw the world?
I mean, I think at my sort of kitchen table, making an impact, doing something that was sort of outside yourself was sort of table stakes. Excuse the pun. We didn't play a lot of poker at my table, at my kitchen table. My father being a minister and all that, yeah, I mean, it was sort of expected. Like, what are you going to do? And it wasn't like, be a doctor or a lawyer or whatever. It was just kind of like, how are you going to change the world? How are you going to change the world in a good way, in a big way? And so that was always sort of the question. And I vacillated between wanting to be all sorts of different things, but wound up having an aptitude for finance and economics, and for the longest time couldn't really figure out how that was going to do anything, noble, and then eventually put a few things together and wound up here. So
before finance and economics, in 1996, you went to Kenyon College to become a writer.
Yeah.
Then switched into economics. Tell me about, why Kenyon, why writing, and tell me about the pivot.
Yeah, I mean, Kenyon, I went to Kenyon because my girlfriend at the time went to Kenyon. And because, as I like to tell my kids when they get hand-me-downs or something, it was free to me. And they were very generous in their support of my education. And so, I mean, I loved Kenyon, had a great experience. Obviously a great writing school. For those of you who don't know, really, like, that's what they're known for. So I went there to do that. Got about to my first few classes freshman year, and one of my classes where we're, really basic stuff, but there's a guy in there named John Green. I don't know if anybody knows John Green, but he wrote like The Fault in Our Stars and Looking for Alaska, and that pretty much convinced me that I couldn't be a writer. So, I mean, I won't sit here and tell you I knew what John Green was going to do, back then, but definitely there were just a lot of other really talented people who had more going for them in that regard than me. And then I actually dropped out of school for a while my sophomore year and went and traveled in Africa, went back to South Africa and traveled up into, Kenya and other places, and just came back kind of like, I come from a family that doesn't have a lot of resources, and going into like the arts is probably not really something that is a good use of my free education. So not that I would love to, but came back, got a math and economics degree. So
After graduating from Kenyon, you started at Accenture and then moved to Calpine, where you led finance and development for gas-fired power projects. You went on to get your MBA at Berkeley and started the Berkeley Energy Resource Collaborative, or BERC, which I know many of you in the audience know or have been part of. Then you joined Recurrent Energy, eventually becoming COO and helping scale the company into a leading solar developer. Looking back on your early career, what did you learn from those experiences?
I mean, I think the fundamental thing I learned was that I really liked math. And I was never really good at math, actually. Like, everybody told me I was sort of crap at math for most of my life. There was always kids that were way better at it in high school. You know, I had like all the AP kids, and those were my friends, but I was like the one guy who didn't do like the second AP Calc, you know, and I always felt like bad about that. And then then I went to college, and you know, there were just kids that smoked me at math. And so it was when I started to put like economics, particularly microeconomics, together with finance and did the math that like it really caught me. And like power in particular, first jobs I had out of college, I was actually coding. The minor that I never completed because I graduated early and I just didn't think it was worth it, was a math minor, but that's a liberal arts computer science minor. So they didn't have a computer science department. So, but anyway, I was coding my first job out of school. And I was coding like dispatch models. So it was all just like pure microeconomics, right? And I loved it and fell in love with the power industry.
What did you like about it?
It just made sense, right? Commodities make sense to me. They do two things actually. Commodities are, you know, it is just a brutal supply and demand equals price relationship that is, it just follows pure logic. It can be modeled, it can be understood, it can be, you know, and then when you get good enough to it and you can start to sort of see supply and demand a little bit less like, and this was maybe like the thing that I'll come back to answer your question, which is like, what was important that you learned in your early career, which is judgment and the ability to make decisions when things get a little fuzzy, which is what you need when you're CEO and when you've been at it 25 years or whatever, like me. You don't get it without literally becoming kind of one with the numbers. Like I have built so many models for so many sort of commodity and, you know, like capital intensive, you know, investments that like I could run the models in my head. And that's the only way I make decisions. Anybody that tells you that they never actually ran the models, but they want to be the CEO and it's okay because they got a guy who runs the models and he gives them the numbers. Like, I find that difficult to believe in capital intensive industries. I think you got to spend 20 years literally wallowing in and becoming one with the model.
Have you ever dreamed in Excel?
Oh, all the time. Yeah. You know, when I was a kid, actually, I played enough video games that like, I'm sure you've all had those dreams where you watch the Tetris blocks fall, you know, those like, but I like through most of my 20s, I had those with Excel. So yeah, anyway.
You eventually stepped back from Recurrent for health issues, took a sabbatical in Hawaii with your wife and your 1 and 3-year-old at the time. Now there's a 12-year-old here in the audience. Was this the 1-year-old or this was the 3-year-old?
1-year-old.
This is the 1-year-old. Oh. You began sketching out the idea for what would become Intersect Power while on sabbatical. How did that time shape your perspective on work and on life and on health? And maybe starting with that, like what was going on at Recurrent and what caused you to leave?
Yeah, I mean, I think, you know, Recurrent was an incredible ride, but it was an experience where you kind of got attached to outcomes, right? Like we worked really hard to sell the company, and then when we sold the company, there was kind of this 3-year plan of like the earnout, and we worked really. So everything was sort of a delayed gratification. Everything was like success was right around the corner, and even as we got better and better, and you know, we did well, you know, financially, we put a lot of solar in the ground, we did all sorts of things, but it was kind of like there was never a finish line, and we did it at such a rate and in such a way that it was actually it was quite painful to do. It was like I don't feel like, at least for me, I had fun, I made a lot of friends, it was great, but I never really enjoyed it. It was never something where I was like, yes, this is sustainable, this is the pace I can go at. The lesson to kind of coming back was, you know, how do I find something that I can do that is, sustainable? How do I find something that I can do that kind of keeps me energized, right?
Mm-hmm.
And so, and I know Andrew Beebe's involved in Powerhouse, and I know you know Andrew. But I thank him really because I took him a business plan that was pretty ridiculous to like deliver energy like milk because I really hate the kind of utility monopoly business model. I find it really difficult to create innovation in, and that's not because I hate utilities. I think utilities do us all an enormous service, and I have tremendous respect for them. I just think that we live in a world where technology enables so many more solutions, and we deserve better solutions, and we can't have them. So I had this obsession of like building a business that didn't cross a right of way or a pipe or a wire with a pipe or a wire kind of thing, so that you would avoid regulation of any kind. So there was this notion of like, what can we make that is an energy carrier and take it to people's door? So I hired some consultants and put a bunch of money and time into this business plan around like delivering, batteries or hydrogen or different energy carriers to people's door, and had done all the numbers and everything. And like, I think, and like Andrew kind of looked at it and he was like, is ultimately like this is like it's like a B2C sort of like it's going to need like marketing and technology, and it's like this isn't what you do. And I was like, all right, well, I guess it hurt for a while, but ultimately like I'll invite him to the closing party when we go public or whatever it is here at Intersect. Anyway, so yeah, I think the realization though coming back to it was. When I pivoted away from that and just said, hey, all right, well, I know how to do this thing where I put steel in the ground. And I got this team of people I love and I want to work with again, and we can go do this. The realization was that like, we want to do it differently, right? This is the most boring, stodgy, kind of like obstinately so, like proudly stodgy, proudly, resistantly ignorant industry in the world. And I say that being part of it and like part of the problem. And so my desire was to really try to take some of the like Silicon Valley sort of ethos that I've been immersed in like business school and that out here in the Bay Area, and really merge that with the utility industry and kind of like let's figure out this kind of like fail fast, iterate, find, pick a future that is like a decade away and go like play for that. And no one in our industry was doing that. And so that's where this notion of like, what happens when all this power is so cheap and so abundant in the wrong place, and how do we actually skate to where the puck is going, right? This durable vision of like co-located renewables, load coming to generation. And I think we picked it right. So yeah, it was about trying to build a different kind of asset intensive platform, but one that actually had vision.
Mm-hmm. And if you're willing, can you say more about what was going on health-wise that caused you to leave?
Yeah, I mean, at the time I just had just these compounding sort of stress-related, illnesses and conditions. Like I was, diagnosed with like chronic fatigue syndrome and all sorts of things. And it took years really to get back from. For years, up until just a few years ago, even when I like worked out, it was like I had this sort of like letdown of energy for days at a time. And so even, I think our bodies are this sort of finely balanced metabolic machine. And I think, there are many times where folks, many people in this room, I'm sure, and other folks who are kind of like driven, high achieving people, our minds can ask our bodies to do things that like our minds can do, but our bodies just can't. And we don't many of us don't acknowledge that. And then you have these problems. And so, spent a lot of time coming back from that, and it's shaped me and what I'm doing here a lot. And to be honest, right now, I'll be straight up with you. It's a moment in time right now where I have never, like to date at Intersect, since I've come back, it has never really been kind of a thing for me. But watching now the external environment we have to face, the politics, the capital markets, the data centers, it's just so overwhelming that I do. I'm going to be fine. I've got a lot of coping mechanisms, but I worry for a lot of entrepreneurs and people in the space because this is just tremendously stressful time.
What was the sabbatical like? You were in Kauai with your 2 young kids and your wife?
Yeah, I mean, I got bored I mean, I hung out with my family, got a lot of time with my family. It was a bit like high school, but you had like money and you could buy beer. Like it was, I mean, like it'd be, Hawaii is this wonderful sort of place where like you can just start having a barbecue in your carport on like a Friday night, and like your neighbors just come over, and like it was the weirdest thing. And like I could be walking down the beach and like it'd be like somebody's like kid's birthday party, and like they didn't invite you, but like you just showed up and like you had a beer with them and you hung out, and like it is a wonderful, wonderful place. But there's a small town on Kauai that I lived in, and it was a great experience. Really kind of settled me down.
So after years in this really fast-paced environment at Recurrent, and then dealing with these very real health issues, you have your 2 young kids, you're starting to think about building something new. What doubts or concerns did you have when you were thinking about launching Intersect, and how did you work through them?
I mean, the primary one was just when you start a business, and I think this was actually part of the problem with my health, was that I have I am defined by my sense of obligation as a human being. And I take my obligations very, very seriously. And I have a very hard time diminishing their impact on me personally, and kind of like my mental health. And so when you start a company, you take on a lot of responsibilities, a lot of obligations to your investors, to your people, and I take those relationships very, very personally. And I think that that's really what led to a lot of the pressure and the kind of meltdown that had Recurrent, and then trying to find ways of coping with that. My co-founder, Luke Dunnington, was a huge part of that. I mean, Luke is a good friend, and was just tremendous in terms of being like someone I knew that I trusted. The team trusted. Nick Pape, my CFO, and call it like the third founder. Also, so people really bolstered that.
When you and Luke officially launched Intersect, what was easy about starting the company and what was hard?
What was easy about starting Intersect Power was calling John Cook at Oric and having him incorporate the entity.
Thank you, lawyers.
that was, yeah. No, I mean, what's remarkable about being, I think, an entrepreneur and starting a company is that like, most people who start companies, if you're good at it and you're a good fit for it, you don't really see a lot of risk. Like it's just what you do. You know it. You know the content. You feel pretty confident that that's what you're gonna deliver, and like that's just like it's like obviously I can do that, right? Like,
do you think it's naive optimism? Because I think a lot of people say, you have this optimism, but then you don't realize how hard it will be, and you wouldn't have done it if you knew how hard it would be. Yeah,
I mean, like, look, it is a bit naive. I do think that like I kind of had the training wheels version of entrepreneurship because I kind of helped build Recurrent. But
I don't know,
Arno,
kinda. You
but Arno was the guy who took the leap, and Arno taught me so much. I mean, Arno Harris, the CEO of Recurrent, like he's just a really talented entrepreneur and someone who I have an immense amount of respect for. And like it's so funny. I was like this like kind of disrespectful kid at Recurrent, and I often said to like. Started? I mean, I was like 28 years old or something, and I was often saying things to Arno like, like I'm the COO, and I'm kind of in here doing the deals, and you're just sort of shaking hands and kissing babies and whatever, like and I was just such a I was an arrogant little shit, but Arno, like, it's funny, everything he ever sort of told me, I'm kind of like I find myself coming back to it all the time and being like, yeah, that was like really insightful. Mm-hmm. So I think ultimately, like I got the best of all worlds because I got this kind of training wheels version of things with someone that really knew entrepreneurship and I got a real good look at it early on. So
shout out to Arno.
Yeah.
You've described Intersect's approach as more about commercial innovation than technical innovation, structuring risk and capital in new ways rather than reinventing new technology. What set your model apart early on? Like what was or is different about Intersect? What is different about Intersect? Was there a kind of product development phase? What did that look like?
Yeah, I mean, what is interesting is that I think we're one of the only shops in the industry that I know that is set up the way that we're set up, which is we have kind of a biz dev and strategy group that is really kind of product development, right? And so, and we see it that way. We kind of look at like, okay, how do we start with a small product? How do we like test it in sort of like call it a model form, like get the techno-economic sort of analysis down, make sure it works. Then maybe we figure out what the commercial structure will be, and we kind of take it apart from a technology, from an economic perspective. And like we essentially kind of test the business model almost completely independent of the business. And then we think about how we roll that out then into all of the functions. Cause, like asset sort of delivery operations, kind of like big asset intensive business, is kind of like a conveyor belt, right? You start with greenfield development, you move through development, construction, finance, and then into operations. And on that conveyor belt, the way I see the world, just in my kind of like, whatever, beautiful mind, sticky notes and string kind of mind, is, this new product development we do over in a corner. And when we get it right, we kind of take in every one of those buckets, we add a new feature, right? So if hydrogen is a new product, we add a new kind of developer, a new kind of originator, a new kind of finance person. And we actually got the whole way through that for hydrogen in a very, very clear and measured way. And then obviously demand fell off a cliff and supply got hit with the IRA. But it really actually allowed us to then do it for data centers much quicker. And so we do have this kind of product cycle that we can rev and then roll it out into the deployment side of our business. So, in asset intensive businesses, tech can often be a commodity.
Mm-hmm. On the fundraising front, you've said that fundraising for a capital intensive business is very different than raising venture. In the early days, you self-funded. You had team members that were working not for pay. Eventually, you brought in capital through a joint venture with Macquarie. Tell me about that initial partnership and where the initial capital just to start Intersect came from.
Yeah. Again, we had the good fortune of having a good result at Recurrence. So we had a lot of flexibility. But at the same time, money is money and it doesn't grow on trees. So we tried very hard to sort of step into the risk on Intersect. Myself and eventually a handful of the other early partners that had also been at Recurrent funded a lot of the kind of third party costs, filings, engineering studies, those sorts of things. And then we had most of our employees, were working for nothing or half pay for the first 6-9 months, and eventually we got we moved kind of up the chain, right? We started with we were really resistant to taking any money because we didn't want to lose any control, and then we went to a JV, and we realized even when you take JV money with Macquarie, yeah, and even when you take JV money, there's still strings attached, and so I could walk you through some horror stories on that one with Macquarie and SoftBank, but we got out of that, and then we just decided, well, look, the strings are there anyway, so we might as well take money into the actual entity from third parties, and what you just realize is asset intensive businesses, but I think really any high growth business, it's a conveyor belt. You're always raising. And you just try to maintain as much control as you can at every point in the cycle.
Say more about that, because I think a lot of founders question this, how much capital to raise, how much control do you give up, how much of your own ownership do you give up? Sometimes that's the only option because you didn't have the successful exit that you had, but how do you think about that?
Eat when served. Yeah, take as much money as you can whenever you can get it at a reasonable valuation, and I would say also when valuations of interim rounds and paper valuations, I can't tell you how many entrepreneurs I have who are walking around telling me all about their interim valuations and how they've got a big this or that or what many of them even go public and it's real money for a while, and then they wind up walking away with nothing. Right. And it's because it ultimately just the interim rounds don't really matter, right? Like, can you deliver a business? Like, never fool yourself about what the sort of investors think your business is worth. You have a good idea what your business is fundamentally worth. And like, if you don't, then go take a corporate finance class, because it's discounted cash flow. And like, but if you're like messing with like, well, the multiple's actually like 40. Well, multiples go up and down by like half at times, right? So you really have to understand the fundamental value of your business, and don't kid yourselves about it. And once you have that in mind and you feel comfortable about, that's a good return on my time and the sacrifices I've made to build the business, I think really spend as much money as you can. And I mean money by sort of like taking, lower round valuations or whatever, to buy governance, buy control, keep control as much as you can. You'll never get total control, but setting up a good structure where where consensus is needed is what we've done, and we've done it very successfully at cost to lower valuations. But never take a job working for your money. For your capital providers, right? Anybody who tells you that they need total control and that they basically want you to be an employee, they're not investing in you or your team, and that's what they should be investing in.
Well said. Well said. There is something to be said about CEOs and control issues, and I say this as a fellow CEO. But I think you're right. I think there is something to be said for control your own destiny, and that's certainly been the case with Powerhouse. So I see you. In the early days, did you ever get close to closing the doors?
Yeah, I mean, so in the early days, we funded ourselves, and then we went into this JV with Macquarie, and I don't say this to slight Macquarie. They're a great shop. I know a lot of good people at Macquarie. I mean, two of the guys that my head of strategy and business development and my chief commercial officer and my first investor now, who's on my board, are all ex-Macquarie, and they were there when we did this deal. So it's no slight. It's just they invested, and then something went wrong with one of the other parts of their fund and another business in the same fund. And all of a sudden it was like we didn't exist. We were the smallest investment in the fund. We were the earliest stage, and we just couldn't no one picked up the phone, right? No one cared. And even if they did care, honestly, their lawyers probably wouldn't let them pick up the phone, because they were a publicly traded fund, and they had all sorts of disclosure issues and other things. So it was just a super complicated situation.
But your payroll was dependent on them, and they're not picking up the phone.
And even payroll, we could have, I could have swung kind of like all of that, but it's more just that there were like multi-million-dollar deposits on PPAs and other things on projects that, like, they were very, very valuable projects, and we just couldn't make the deposits. But they were obligated to fund, but we couldn't get them to fund, and so we had to go back to the well and really like put a lot of personal money at risk. On the knowledge, on the bet that we could get out of this partnership, which we did, but yeah.
And then SoftBank came after?
SoftBank came in and weirdly, in the weirdest turn of like M&A I've ever seen, purchased the highly illiquid interest of Macquarie in this like weird JV through a process that was like run because Macquarie was a public fund. That fund was like it was the weirdest process. But so we didn't have a lot of like touch points with them beforehand. And I think in some sense they kind of thought or hoped that they were kind of buying Intersect. And then it became clear that, I mean, they knew they weren't, but I think they thought like we would just sort of be like, oh, thank God, like why don't we all throw in together? And obviously that wasn't what we did, but we were very successful together. I mean, we went and finished the portfolio of projects there, and they're currently running. I mean, and SoftBank, that's a good chunk of SoftBank Energy's current operating fleet is our firstborn.
You've described Intersect's journey in stages, from proving the Recurrent team could do it again, like get the band back together and create this new wave of projects, and then expanding to things like alternative fuels. You mentioned green hydrogen, co-location, your work with data centers. We've talked about that first chapter, like getting the band back together, some of that initial team building. What did the next few stages look like in terms of team building, evolving the business, taking on these new types of projects?
Yeah, so I mean, the second phase, we finally took money into the Topco in the end of 2020, early 21.
Was that all private equity?
It was all private equity, and again, we kind of ran I'll give you the insight on this. We ran a process that we ran ourselves, and we had term sheets from some folks, and we had term sheets from like big private equity. Again, like, you know, I would call them employment offers. And we chose not to do those. And those were like, I have friends in those places, and like, if everything's going well, I actually think that they would have been great. But, you know, when things don't go well, they're not. And so we kind of went with two smaller shops, one of which was someone I know very well, Bill Green, who ironically was at Macquarie and made the original Macquarie investment in the JV and then left. We took two smaller shop investments at not as great terms so that we could, you know, essentially scale the business. And then from there we could scale from, you know, that was $180 million or so, $130 million. And we went from 23 people to like, you know, 75 and then 100. And we really just took a lot of early stage stuff that had come out of that we'd sort of purchased out of the JV, the dregs, if you will, and turned them into $4 billion of operating assets right now that are, you know, the core of the first fleet. So
not bad. Intersect is known as an innovative developer, and you've partnered with a couple Powerhouse Ventures portfolio companies, Terabase and Taiba and Raptor Maps. You most recently signed an LOI with our newest portfolio company, Heron Power, led by former SVP at Tesla, Drew Baglino. What drew you to those partnerships, and how do they fit into your broader strategy for integrating new technologies, which again, I think is something that Intersect is uniquely known for. And you spoke to this earlier about how incumbents are just not integrating new technology, not innovating, and that's part of the impetus for starting Intersect.
Yeah. I mean, so I was going to make a really bad joke about what drew us to those companies, but like I mean, Drew and you know, the quality of teams at a lot of those companies, right? I mean, I've known the Terabase guys. You know, we've done a ton of business with Drew when he was at Tesla. Obviously, Simon, my chief commercial officer, and Andreas, our head of strategy and BD, all worked together there with a bunch of the Tesla folks. So, really, honestly, a lot of this is just about relationships. Like, you know, people ask like what I do and what I do these days and what I do differently that got me here or whatever, and like, I try to pick up the phone whenever I can. I try to reply to an email whenever I can. I'm not perfect at it, particularly right now. Like, there's almost no way I can keep up with most of what is going on around me. But I'll always try to sort of do a solid for anybody that I possibly can. And that will continue hopefully for the rest of my career because it's been really good to me. Human relationships and finding good people who are really, really smart and that you want to work with and that you admire and you think are innovators, that's really what it's about. So I think a lot of those partnerships come from that. And, you know, let's be honest, like, I mean, I love where someone like Heron is going, but it is a very large bet on Drew and his team. And that's honestly a really good bet in our eyes. So
Agreed. Couldn't agree more. You started Intersect 9 years ago in 2016. At the end of 2024, you had raised $900 million in private equity, bringing total equity raised to over $2.1 billion. Who has financially partnered with you along the way? What type of capital was easiest and hardest to raise? And what guidance would you give for other founders that are out there raising, especially for capital-intensive businesses?
I mean, again, it's almost all private equity money. We started with smaller private equity shops to begin with, where I think you're going to get a better deal. And I think you would do well to focus on personal relationships with those folks, spend a lot of time. Don't get a bank and run a big process. You know, maybe get a bank, but find the 5 or 10 shops you're going to, you know, maybe meet the people and go spend a ton of time with them. Having good, strong personal relationships with smaller private equity shops in the early kind of call it multi-$100 million phase of capital intensive business, I think is critical. And then once you get into the sort of multi-billion dollar phase of the business, you're going to have to play ball with kind of like much bigger PE shops, and you'll have hopefully a little bit more, you know, kind of leverage and understand how the game works. Also, there are, you know, people that fit the bill at almost all levels of that capital market. There are differences between shops if you look hard enough. I mean, so, you know, I talked already about Bill Green and you know, the two smaller private equity funds, Climate Adaptive and Greenbelt, who came in early. But we've partnered now with TPG, and they and Google did kind of the bulk of our last round at the end of last year, the $900 million. And I mean, that was a very intentional decision. We had other infrastructure sort of, private equity that would have done the deal at a much better valuation, frankly, like a shockingly better valuation than what we took from TPG. But those guys they had a sort of element of like growth, a growthiness to them that was like private equity, infrastructure money with a focus on growth. And ultimately our business is a play on infrastructure is growth again, right? Like it used to be growth, like in, beginning of the last century, like electric power was Google, right? And it can go back there again. In fact, we're maybe going into an era where Google is electric power. But I think that kind of like matching what you're trying to build in terms of how you see the value being created with what the investors think the value is, super important.
Mm-hmm. Did you intentionally not want to go the VC route for the Topco in the early days?
Honestly, I mean,
I won't take it personally.
No. I mean, this is the problem right here is that like most VCs, hopefully you don't take this personally, and that is that like, I mean, I think my experience with VCs in this space is that, if they decide to get in on a company like ours, it's usually a mistake. Like it's usually because they didn't understand what it actually meant, right? And that's problematic because then you wind up with, ultimately if you're successful, what you get for your success is the need for bigger and bigger checks. I mean, like at this point right now, we're out raising another round right now that'll have like a B on it, right? And we're building $9 billion assets right now. We're negotiating contracts. It's another like potentially $10 billion of construction starts next year, so we're at a point where like there's other than the public capital markets and maybe a handful of like global sovereigns and other people, there's almost nobody that can write checks big enough to fund our business, right? And so you take that problem, scale it down, and I think you wind up with the same kind of mismatch of like VC money getting into capital intensive businesses. So it's not to say it can't work. I think you got to have a really good plan of like where the money's going to come from next. So I got to give you one more good example. I'm on the board of a company called Elemental, which is Shale and those guys have invested, and it's a nuclear development company, and I have tremendous amount of hope for nuclear as a part of the solution for climate. I don't think it's going to be the solution for data centers in the very near term, but we can talk more about that. But I think they're very clear-eyed about how that's going to work, and there's some very thoughtful positioning around that. So anyway, they can be done.
Yeah.
Yeah.
There's a reason our strategy at Powerhouse Ventures is capital light. So, all the companies we mentioned, Raptor Maps, Taiba, Terabase may be a bit of an exception. Heron, bit of an exception, but you got to break the rules sometimes.
Yeah.
To help me and listeners understand what it looks like to be on site at one of your projects, like take me to one of your projects. If I'm standing there, what am I seeing? What am I experiencing?
Yeah. It's very hot, and very dry. You're probably wearing sunglasses. Hopefully you're wearing boots and a lot of PPE, which is different than some celebrities who have come to our sites for various events and things that we've done.
Who have you got at your site?
Oh, yeah, I can't disclose, but certain people have refused to wear.
What's the purpose of the celebrity? Certain
people have refused to wear PPE on our sites because they're too, whatever. I don't know, but like we've had to like literally follow people around with fire extinguishers. Like so, like yeah. Anyway,
amazing.
So there's some anyway. But yes, so you're probably wearing PPE. It's hot. It's dry.
But not if you're a celebrity.
How tall are you?
5'7".
Yeah, so you're probably seeing over the top edge of the depending on what time of day it is, the trackers on the panels on the trackers. Yeah. But if you're much shorter than that, you're probably not seeing very far. You're probably seeing a lot of glass pointed at you. First Solar panels, all American made. We're their largest customer. A lot of Next Tracker, whole lot of Next Tracker out there in the field. So you're seeing their brand everywhere because they're well branded. And so you're going to see Oberon. You're going to see 4.5 square miles of black good-looking solar panels, and then you're going to see a big field of batteries that look like just a huge parking lot of containers, shipping containers that are, Tesla power, Megapacks that were one of their largest customers, so it's not particularly exciting, to be honest. It's not like thrilling. Maybe the most thrilling thing is the substation, because if you are a power geek, like when we kind of reloaded, people told us like, you're crazy, you're leaving Recurrent, you don't have a pipeline, how are you going to ever play in places like California, which is really like our team has built, I think, between Recurrent and Intersect, like 20% of all the utility solar in the state of California. And like they were like, how are you going to reload in California? And we did it by just doing things that no one else has ever done or is doing, which is like we've built almost all of our projects, and we're building all of our future projects at like 500 kV. We're going straight into the like big substations. We're building a $200 million substation right now that we will deed to PG&E. Like most people aren't building projects that are $200 million. That will support a $5 billion single asset that we're building in California. So, like when we think about the substation electrical infrastructure, that's probably some of the most exciting stuff we're doing. The sub on that is 500 kV at Oberon, and it looks like if you've ever driven past like San Onofre or like, the big nuke down there by San Diego, it looks like that kind of interconnect. So I don't know, if you're a power geek, it's pretty cool. It's huge.
It sounds fun to me. Something that's less fun is OBBB, which passed recently, projected to very much slow the pace of clean energy development, new restrictions on tax credits, material sourcing, et cetera. What does the bill mean for Intersect's priorities and prospects going forward?
So a handful of things. I want to talk about us, and then I'll talk about the bill, and then I want to talk about the reality of politics. So remind me of that if I forget that last part. For Intersect, it's really not that big a deal. OBBB is like, or OB3, or we're still working on the name. It's got to be something good. But like I've heard a bunch of tries. But OBBB is like, we already commenced construction, not under the kind of like up for debate commenced construction extension thing that's out there, but under kind of like last year. We're in financing on everything. We're in construction on almost everything at this point, like dirt moving. So we're not really threatened that much. We're the most American supply chain in the business. First Solar, Nextracker, Tesla. We have almost nothing in our whole system that is not American made at this point.
And that's been the case from day one, right?
From day one, we went to make our first order for that JV set of modules in 2018, and I was reading all the reports about the humanitarian crisis in China with the sort of oppression of the Uyghur minorities, and I just couldn't get comfortable with it, honestly. Like I worked with all these supply chain consultants, called all, we can get you into the factory and prove that there's nothing going on. And it's just like, if the Chinese government doesn't want you to see what's going on, you're not going to see what's going on. So like kidding yourself and making yourself feel better about it doesn't help. So we made a principled move there, and it turned out well for us economically. But so the OBBB doesn't bother me that much as a bill. Like we should have all been prepared for it. And in fact, what bothers me more, I think, is the industry's response to it. Because, we're being very unrealistic about... I told people right after the election we should be backing up faster. What people don't understand in kind of like the Bay Area and renewables and that is that like this isn't we're not being viciously singled out, guys. Like literally this is exactly what the Biden administration did to natural gas. It's exact down to the fact that they literally used the words from some of the executive orders, the same words. It was very, very purposeful. And like, they have a point, to be quite frank. Like, energy should not be a culture war. It just shouldn't. It's too important to humanity. It's too important to society. And like, the number one threat to decarbonization is the constant whipsaw back and forth based on politics of the politicization of energy and infrastructure. Because it's not like software, it's not like other things. You can't just reboot it and put out another version of it, or take it offshore or whatever it is. Like, you've got to have long, predictable development cycles, and like that's true if it's fossil or renewable. And so I'm frankly very, very frustrated with the industry that we didn't figure out what we could live with, and frankly keep our dignity, and not try to get this extension that no one's going to use because it's all full of foreign entity issues and other things. And no, it's just never good luck getting anything financed under this 48E extension. Honestly, read it. I maybe some people will, but it just wasn't worth the effort. What we should have done was figure out the package of things we're willing to live with, and try to take this thing off the culture war path. Try to make some deals. Try to befriend the natural gas industry, frankly, who I get it. We don't want to put another molecule of carbon in the air, but we also want to turn the lights on. And so, and China was basically providing all our batteries, and California decided to go the not a molecule more of carbon route and only batteries and solar, and our prices are spiraling upwards. So there has to be a balance in the middle here. And we got to get people in a room and find it, because this isn't helping anybody.
We're going to pivot to some more reflective questions. Not that these haven't been reflective, but more personal, I should say. How has your leadership style changed, if it has, since you started Intersect 9 years ago?
I like to think it hasn't changed that much. I'm a extremely transparent, heart on my sleeve leader. I get a lot of that from my father. Being a Methodist minister, you lead a large group of people in many cases, some larger churches, and it's just the way to really inspire and motivate people is to connect with them. And to do that personally, so that gets harder. That doesn't scale great, right? So you got to figure out then how to be really a better communicator, and to figure out how to make connections with people. When you're in a room of 100 people, find that person where they are in that seat and make that connection. Understand that you are talking to them. And then, find the opportunities then to follow up with people individually in that, and make the time for it. So it's really time intensive. And that is something that has not scaled as well as I'd like it to be. And then the second piece is other than maybe operations, I understand our business very, very thoroughly. And I think that has a tendency toward micromanagement and control, and so putting that down has been harder. But yeah, everybody will say that. It's kind of like the job interview question, right? Anyway, we all know the joke.
Back to your point about relationship building. Back to what Arno told you about shaking hands and kissing babies. Turns out that's a lot of it. Can you speak to your experience being who you are, your demographics in the industry that we're in? How do you think about that?
Totally. Being a middle-aged white dude in the utility industry, in the energy industry, well, a couple things. One, I will tell you that as I've become a middle-aged white dude, emphasis on the middle-aged part, I guess, because I've been a white dude for but as this has happened to me, I now realize that yes, I am almost every cliche that is possible for that demographic, and all the stresses and other things that compound in life, and the stretch in every direction, but I think in the industry as a whole, what I try to sort of do in terms of my part to not make it, full of middle-aged white dudes is two things. One, try very hard to create less kind of quotas and like definitive, like we must be this, we must be that, and more just how do you figure out how you model inside your company what you want the broader company to look like. So, okay, how do we make decisions? Who's making those decisions? Who's involved in the meetings to make those decisions? Who's going on the road shows when we go to banks? Who's presenting on behalf of the company? Who's talking, to investors, to other people? Like, because when people see who that group is and what that group looks like, it shows everybody that there's a path through that company, that like what the company values, how people can be successful in the company. We're not doing as good a job with that as I'd like to, but we have a tremendous layer, I think, of leaders just below our C-level, and we're actually in the process now of adding some folks at the C-level, and I think that is what I focus most on, because I think the rest kind of follows a lot, And then with respect to kind of like diversity generally, one of the things I'm most proud of is that even before kind of DEI was big and now, gone and all the rest of it, like again, Intersect tries really hard not to be political. We try to be like, let's do the math. So like, what do I want? No matter who I am in my company, I want to be accepted for who I am. I want to show up at work and have people see me for who I am. And like, even if I'm, female or a minority, like, I don't want to, I'm not, but I got to assume that I don't want to be seen as just that in my company, right? So we really try to make our program around like just really our community is what we call it, just really about who you are, right? So how do we make breakouts work? How do we make opportunities for people to connect with each other for who they are and what's going on in their lives that day, not kind of like what category they're in or whatever. And I actually think that works better than anything I've seen. And obviously we're small enough that we can do it, but it's scaled pretty well.
You're a partner, a parent, a founder, a CEO, all at the same time. Your daughter is here, Sydney. What is it like being all those things at once?
It's humbling. I talk about this to my friends and, whatever, my therapist and, whatever. But there's this notion of kind of like big life, small life, right? So, no matter who you are and what you do and how many billions of dollars you've raised or, how many, senators and presidents you're shaking the hands of or, big conclaves in the desert you're going to, you put your pants on, one leg at a time and you go home and you try very hard to help your, teenage kids figure out, how life is going to be, for them as they grow up and, you just deal with life. And there's this notion of kind of big life, small life that I like to kind of, it helps me frame things up because it's like, I have to, on one hand, go and, go and, tour around with senators and other people and, have breakfast with governors. And then I have to turn around and like come straight home for like, a music performance at like, a public junior high in Truckee, California. And like the second one is really what's more important to me in many cases. And like trying to figure that out is hard. Right. And how do you show up there and like have made that mental shift to be like, someone asks you what you do for a living, I'm almost sometimes loath to answer when I'm in my hometown because I just don't want to get into it, right? So I think that's the transition. And also like, what do you go home and then expect your partner to be like, like really impressed by what you do? No, they're like, what the, like, thanks for coming back, like, and doing your share here. Yeah. So it's humbling. Yeah.
If you've said that as Intersect has grown, your goals have only gotten more ambitious. When you think ahead 10 years, where do you see Intersect? Where do you see the industry?
So again, I mentioned it at the outset, but I really do believe that we deserve a better business model for retail electricity. I really do believe that as electricity becomes a more important fuel for our society, we have to figure out, again, I'm not looking to blow up utilities, business model, or anything like that. I just think that there are important ways we need to change how we regulate and deliver energy that allows for some of these innovative things to take hold. And it might be that they just take hold for a little while, like co-located renewables and, gas-fired and whatever for data centers off-grid. And then that kind of pushes and stretches the regulatory fiber in a way that we finally get to build transmission and other things. And I think that's what probably is more likely than some wholesale big revolution. But we do need to have the tension of other options out there, other potentials for business models. So I think my hope is that in 10 years, we've seen and realized some of that sort of business model innovation and industry impact. And then my hope, and actually my strong belief is, actually not in 10 years, but in 10 months, that Intersect that I'm able to sit here and tell you about all the things we're working on, which really then become, frankly, just the poster child for what very, very large electricity intensive industries will look like going forward, which is the vertical integration in many cases of that load being digital and data centers with the actual generation itself into these massive gigawatt scale clusters that we're working on, that we're going to be building, that we're already building in some cases, and that we'll be announcing more and more of, right? So being able to show that model in action and be one of the largest players, be the leader in that space, be the change agent. That's what we're looking to be, is the $100 billion nimble startup of revolutionizing the retail electricity business model. So yeah.
We're going to close with our high voltage round. Quick questions, quick answers. Quick meaning like 2-second answers.
Okay.
Starting with Sheldon Kimber. If you were going to be an animal, what animal would you be and why? And let me clarify, not what you want to be, what you would be.
Wow. Probably a bear.
Give me like 2 words on why.
I'm big, slow,
What?
but overwhelming. Big, slow, overwhelming, and also, okay.
What inspires you?
Language.
Back to your writing roots. If you had to start a new career tomorrow, what would it be?
I want to be an actor.
Other than
People laughed. That's like
you got to be
you
okay with
mock
that.
my dreams. What?
Other than yourself, to whom do you attribute your success?
My parents, my family, and also just I've got the most amazing group of people to work with that anybody's ever had. And they've been dumb enough to do it twice now. So,
Tell me about a specific time you failed. Again, just a few words.
I decided to hold the board meeting in London to be nice to my investors who are based there. And it cost us at least a week of our senior team's attention.
Yeah. What is something that you thought was true that you no longer believe?
That
When we do this virtually, that gets paused for a really long time, and it's fine because you're virtual and nobody's listening. So
okay.
Take your time.
One more time on the question.
What is something that you thought was true that you no longer believe?
That there are political solutions to our societal problems.
Who has had the biggest influence on your life and why?
Probably my dad.
Oh. I can't go past that without asking anything you want to say to him since he's here. Literally in the front row.
I'll spare him that. He's in the front row, so I'll tell him later.
All right. Sounds good. When are you your best self?
When I'm under pressure and surrounded by information.
What is your worst trait?
Talk too much.
If you could change one thing about the world, what would it be?
The confusion, the belief is fact. That everybody believes that their view is somehow right. The truth is between all of our beliefs somewhere.
If there's just one person who is going to hear this episode, who would you want it to be?
All of those girls in high school that wouldn't go out with me.
That is a first. That is a first. My follow-up is, if they were standing in front of you, what would you say? But let's not. Let's skip that. Let's skip that.
I did tell you that I built computers in high school, though. So, I mean, I
Finish these sentences for me. Companies fail because.
They're slow.
If you really knew me, you would know.
I'm scared.
Success is.
Surviving.
If I could have done one thing differently, I would have.
Become an actor.
It's not too late. It's not too late. You already have celebrities prowling around your projects. If the world knew me for one thing, it would be. The people listening can't see your facial expressions, but I just want to say they're golden.
All right, that's good. That's good. If the world knew me for one thing, what was it?
If the world knew me for one thing, it would be.
It would be. I'm not sure I want the world to know me for anything. I think that's like, yeah. I think that too many people want the world to know them for something, and the reality is we're just all the kings of our own molehills. You know?
Well said. I'm most proud of.
My kids.
Last question. To build a successful startup, what it takes is?
Never take a no for an answer.
Please join me in giving a massive round of applause to Sheldon Kimber.